I'll just very quickly introduce the panelists because we're here for a good time, not for a long time. Let me just get them in the right order here. Take me a moment. There we are. So from right to left, as you see the panel, Alexis Tapin de Tilk is Managing Director and Head of Debt Capital Markets for Central Eastern Europe, Middle East and Africa at BNP Paribas, based in London. Samad Sirohe, to my left, is Managing Director and has exactly the same title at Citi, based also in London. To my right, we have one lone investor on the panel. It's one investor and four banks. Are you feeling hunted? Have they all tried to sell you something yet? I bet they will. Tarwat Amr is the CFO at Sedco Holding, of course, based here in the Kingdom, and we'll hear a little bit more about what they're interested in due course. Mona Al-Tawil is Director and Head of Structured Finance at HSBC Saudi Arabia. And on the left of the panel, as you see it, Wasim Al-Khatib is Managing Director and Head of Investment Banking at NCB Capital. Now, just before we dive straight in to talk about what's happening next in bond markets in the Kingdom of Saudi Arabia, I just want to get a couple of comments from people here. It is undeniable that we're living in a moment of astonishingly high levels of issuance of emerging market bonds generally. Now, I suppose there's a number of obvious things driving that, like investors trying to search for some yield where they're getting paid negative yields by a lot of high-grade bonds. Equally, perhaps borrowers getting in before interest rates start to go up. But if they ever do, we'll find out tomorrow if they might have gone up a tiny little bit. But I'd just like to ask a couple of the global banks here, just for a quick moment on what we're seeing globally in terms of fixed income, because it really is that the volumes this year have been dramatically large. Mona, do you have a thought on that?
I think given the scarcity of the issues from the
You have
Saudi
to move the
market.
microphone a little closer, or yourself closer to it. Yeah.
I think the scarcity of issuance from this region, and specifically from Saudi Arabia, definitely drive the demand. We've seen SEC, we've seen SABIC successfully approach the international market, and the demand for the paper has been extremely high, whether in the past or even the latest issues done by the Kingdom of Saudi Arabia, where the oversubscription was staggering. The demand is there, and the paper is not there. So I think there's a huge demand out there.
We'll come back to the specific Saudi example in a moment. Alexis, this is a global phenomenon. What's behind it?
Thank you very much, Christopher, for the answer, which is indeed very valid for all of us. I think key drivers, in my opinion, are first of all, we have an improving commodity prices worldwide, especially oil. Christopher, you will remember, and all my colleagues here will remember, beginning of last year, when we were cruising at $20-ish a barrel. Today, it's a very different context. That higher oil revenues are a big boost for demand for emerging markets from an investor's point of view. I think you can add to that a favorable Fed environment. I mean by that the Fed has always indicated that it was going to move up its rates, but not in a brutal way, more on a well-managed one. And that has given a lot of guidance to investors to steer their money towards emerging markets. And finally, Chris, I think the main drivers of attractiveness for this asset class are the fundamentals, be they macroeconomic, be they political. But in essence, emerging markets offer investors in economic growth, low or relatively low level of debt, and very conservative fiscal policies in general and reforms. All that together is a very good mix, and that is, I think, a very strong rationale for investors and a big driver behind their demand for EM, and this region in particular.
Samad, you cover emerging markets borrowers across quite a wide region, as Alexis does, and obviously the firm covers every possible corner of the globe. Anything to add to that?
Yeah, I mean, beyond the strong fundamentals that emerging markets have, there's also the fact that there's a considerable amount of supply as well. So we're talking about demand being there, but at the same time, we've had more debut issues from more countries and more borrowers.
That was my question. Why is that?
Fundamentally because of the fiscal needs having gone through a cycle of hydrocarbon price adjustment and commodity price adjustment. So it's not just a GCC phenomena, but we also see, for example, in Africa, we've seen a lot of sovereigns come out to borrow because there has been a need to borrow. And there has been, on the other side, obviously, a favorable appetite, a demand that is available because of all of the technicals that we've heard about. So there isn't if you look more broadly, last year we had over $500 billion of issuance from emerging markets. Half of that came from Asia. And Asia has been quite prolific.
And so far this year, what have you seen in the global emerging markets universe?
I think in global EM, we've had about 275 billion. I would say half of that has actually come from Asia.
But the point is, globally, it's tracking way ahead of last year. That's the point.
It is on a run rate that is ahead of last year.
Okay. Wasim, let's turn to you as the local financial institution. And I'm not going to ask you that same question because that would be OTOs. What are we going to see next here? I mean, just as a moment of prefatory remark, obviously debt capital markets are, in a sense, in their infancy in Saudi Arabia. I think everybody would agree on that. Of course, they've been very much in the news recently because of the massive sovereign issuance, which we're going to talk about in more detail, but the overall universe of issuers is tiny. Nonetheless, I'd like you to give us a sense of what you think is coming next, not perhaps in terms of specific issuers, but what sort of structures, what kind of currencies, what tenors? Will we see more sukuk? Will we see more conventional? How do you see that? How do you see the market universe developing in terms of issuance from the kingdom, whether local or domestic? And before you answer, I wonder if I could just ask the group of people to the left of the room, excuse me, I wonder if I could just ask you to take your conversation outside, because it's rather disturbing, certainly to me and no doubt to the other speakers. Thank you. Wasim.
Thank you very much, Chris. So if we are just to rewind a little bit to a couple of years ago, when the oil took a downturn and the liquidity became more scarce, we saw a spike in the cyber rates, and there is a reflection of that. Even the spreads for the corporate issuers became a little more expensive by Saudi definitions. And when we look at 2016, we saw a record low number of issuances and volumes in comparison with 2012, 13, 14, and 15. Now, the government has done a good job, along with SAMA, to revive the liquidity levels and encourage the issuers to tap back into the market. Some of those measures include relaxation of the loan-to-deposit ratios to 90%, the introduction by SAMA of 7 and 28 day repo facilities, and obviously the famous debut issuance in international markets last year of $17.5 billion, followed by the most recent successful $9 billion sukuk issuance format. That created a momentum, and we saw in 2017 so far that some issuers started tapping back into the market, and we're working on several issuances alongside my peers on this panel here. And most recently, there was a sub-sovereign issuer that tapped into the market in the private domain and raised 11.5 billion Saudi riyals, which was covered 2 times, and that shows you that the sentiment is starting to improve. From a regulatory aspect, Chris, in my own humble opinion, the CMA has done a great job in addressing, number one, diagnosis of why the debt capital markets are not developing the way they should be. And as a result, they started introducing new regulatory frameworks, be it on exploring the SPV law or encouraging issuers to take the public offering route rather than taking the private route. And we think that the signs will start to show very soon as a reflection of that and coming out of this bottleneck of 2016.
Mona, do you have anything to add specifically on what you see as the kinds of structures we'll see a lot of here?
Sure. I think, just to add on what Wasim just said, I think what the local market, I think issuers have taken the private route. although we've only seen 6 or 7 public issues, we've seen something like 50 or 40 local private issues. The market is active, and throughout the past 2 years, I think we've seen 240 billion raised in the private and public market. Again, I think in terms of structures, I think definitely the Islamic structure is going through a lot of variation. We've started with the Murabaha, Musharaka structures. We've evolved and we've changed. Some of you will know that, for instance, Inma and Bilad, the local investors, have their own structures and will not go into certain. I think what we've done through the private placement of the deal that Wasim just spoke about is it's been evolved to a level where an Islamic structure which is acceptable by all of the local investors. And this will definitely help the market evolve. Again, what Wasim touched upon in terms of the CMA encouraging the public route, this is something that probably will need to progress again. In terms of tenors, I think the tenors remain within the levels that we've seen in the past, and we've seen 5 years, 7 years, and 10-year issues. Again, I think this will continue. Reaching out to the higher end of the tenors, I think this is something that at least locally investors will probably avoid for the time being. I don't know, we have an investor here. I don't know if for a local issue would you consider a 30-year sukuk or not. But I think
So you see, I told you they were going to try and sell something to you. Now, just to be sure, I mean, a private placement doesn't mean that you can't talk about it. It's Aramco. I mean, a private placement is private in the sense of the terms, and it's not offered for public sale, but it doesn't mean that it's private, that we can't talk about it. Tawat, what kind of deals are you looking at? Did you buy the Aramco private placement?
No, we haven't looked at it.
That wasn't you? That wasn't you? No.
Like
Wasn't
when I
your
mentioned,
reverse
it's
inquiry?
privately placed, so it's really limited market, small market.
This momentum that Mona talks about and that we've seen sort of partly driven by these headlines of the massive sovereign bond issues, where do you see that momentum going? And is it demand-led or supply-led?
Demand for what, sorry?
Bonds.
The demand is there, the liquidity is in the market. There are not that many issuance, and we were discussing this a few minutes ago there. If you look at the issuance last year, there were, like five issuance for companies in the size of Saudi Arabia. So the market is definitely underserved. I would like to take this opportunity to welcome Citi to Saudi. Welcome. I think the market needs more bankers and more offerings.
It's not very often that you hear people say that. Yeah. Wonderful. The market needs more bankers. We need more bankers too.
Yep.
Yeah, that's good.
But we have to note that in general, the asset class, the fixed income asset class, or served by the DCM, is not very attractive, or was not very attractive due to the zakat and the tax issues that we have here. As you know, 2.5% zakat base, 2.5% applies on the positions that investors will hold. Recently, there's been some developments where the regulator said also mutual funds and equities will be subject to 2.5%. So I think this will level the playing field, if you will, between fixed income and equity. So I think this will be something good for DCM, perhaps not positive for the ECM, as the authorities will go after mutual funds as zakatable, when it was a kind of a dark area before.
Okay, let's talk about the elephant in the room, which they're all bursting to talk about as they're all skating away from my other questions. Largest emerging market sovereign bond issue completed by the Kingdom of Saudi Arabia towards the end of last year. All four of the banks on this panel were involved in one way or another in arranging that deal. I'm going to ask each of them just to give us in a minute or so what stands out in their memories from working on that transaction, what surprised them, what was challenging. Really just give us an impression of what it was like to work on such a groundbreaking transaction, where the pricing was obviously something that was very, very difficult to discover. Alexis, why don't you start us off?
So I'll give it a try, Chris. As you said, we all have our interpretation. But let me put it this way. I think what I admire most in what has been done is perhaps the approach. What do I mean by that? I mean that the Kingdom has taken a very proactive approach, which was also a very humble one in terms of listening very carefully to what the market wanted to buy as a first transaction. Therefore, they went with a simple structure across conventional maturities, 5, 10, and 30 years. They basically went where the sweet spot of the market was to guarantee the lowest risk of execution and the better pricing. From my recollection, the pricing was groundbreaking. It was below, it was through the CDS level. And final point from my side, I remember the composure and the extreme professionalism of the teams who went on the roadshow on this occasion. It was remarkable because when you present a first coming country to the market, it's already, I would say, something to do. But also when you, at the same time, present a vision for a country with all the package of reforms which go together, that's an extra level of difficulty, an extra level of challenge. And all that was remarkably performed. So my praise to the Kingdom and to all the teams which have been done. These
You
will be my
of course
impressions.
also worked on the Sukuk this year, and we'll ask you
Yeah.
Professor, quick. Let's just come to Samad though. Your standout memory to begin with of working on the transaction.
Well, I think it's just, it sounds cliched, but it was, in the context of the achievements, it was unprecedented in the capital markets. And what's more important, I guess, is that if you were to look at this, if this was a company, this would be an initial public offering. It was almost an IPO in the context that there had never been a document that provided that level of insight into this country, its history, its finances, its assets, its wealth, that was provided in that document. And for a country that has traditionally not been used to the concept of public debt, achieving that in itself, presenting that to the market, was probably the, of course you can say it was the largest bond ever, largest order book, so on and so forth. Put that all aside, but to achieve that level of transparency and disclosure, and to go out there and sit across the table from effectively providers of credit, that, I think, is a standout result from this exercise.
And normally, obviously, when you're selling, you've been on hundreds, possibly thousands of bond roadshows. Normally, when you're selling a credit, of course, you're selling something historical, and you're selling a record, you're selling something that's already there. Here, as Alexis puts it, you were selling a vision. Did that make it very different?
I think the vision is certainly the strategy of the country, the strategy over the next so many years, which will address a lot of structural reforms and targets that they've set themselves. That was very much part of the delivery, but what was also important was to look at the historical approach to, this is not the first time oil prices have been low, to establish the historical counter-cyclicality approach that the managers of the economy and the managers of the wealth of the country have done. That was what allowed people to take a lot more comfort about the capacity and willingness and ability to implement this Vision 2030. So it was past as well as
2030.
As 2030.
I'm not sure if you heard, just quickly, I'm not sure if you heard my opening remarks first thing this morning, but I was putting an argument which seems to me, well, I like it, that in a sense, the submission of Saudi Arabia to the kind of externally generated discipline that global bond markets bring, public markets bring, is almost more important in terms of shifting ideas of governance, transparency, the way the economy runs, than is the money received. And there are receipts of the bond. Obviously, the receipts are very important for financing, but almost it seems to me of more importance is the submission to these disciplines. Do you agree at all with that analysis?
This is I mean, how you perform in terms of your fiscal targets and other targets that you've gone out and explained to investors will be reflected in future access, pricing of your securities. So yes, it is a barometer. And it's not the only sovereign that has looked at it this way. I mean, if you look at broadly in the region, there are others who have not needed the dollars per se, but they've actually welcomed the discipline that having public debt outstanding gives you, because you have a third party that is asking you questions, that is monitoring how you're performing. And if anything, that can be a boon for good governance for anyone.
Mona, do you agree with that?
Yeah, I think we heard this morning from His Excellency that the intention and actually the announcement that we've been hearing and the plans that we've been hearing definitely indicate a more open and more transparent approach. And definitely the discipline is kind of entwined within this approach. Given that the sovereign has issued, this has been the second issue, it's definitely an indication of the approach they're taking and the transparency and the discipline that they're taking on issuing the paper itself. I guess the kingdom itself, the sovereign, had actually raised a loan, I think the beginning of last year or April of last year, with banks as well, and that as well shows the transparency and the discipline that the
Of course, a loan has a much smaller number of counterparties than a bond.
That's right,
so
definitely.
there are many fewer people to ask you
Definitely.
difficult questions.
That's true, but again, the number of banks there as well merits transparency and candidacy
Sure.
as well.
Not that any of those banks were hoping to get a piece of the bond mandate. Wasim, your impression of working on the Sukuk, let's come into this year, on this groundbreaking dollar global Sukuk bond issuance. What sticks out for you? It's only a matter of weeks ago. What's your impression of that transaction now?
Sure. So, very similar impression to what my colleagues Samad and Muna mentioned on the debut bond issuance last year. I think the conviction of the global investor community with the Saudi credit story was something outstanding that we saw. And if you allow me just to share a memory, which was the previous question, I remember in New York when we were closing the bond issuance in October, and the syndicates were refreshing the tab every 2 minutes, and we're seeing the order book grow by a couple of $1 billion every 2 minutes. And that was really unprecedented to see for an emerging market country receiving that kind of order book. We saw the same thing in the Sukuk issuance, and if you are to look at what the government is trying to do between minimizing tapping into reserves and entering into syndicated facilities, they created both programs, the bond program, which was inaugurated last year, and then the Sukuk program, which was executed for the first time in April. And the interesting part is post-listing of those instruments. Obviously, those familiar with debt capital markets, there's always a price differential on the spreads between Sukuk and conventional. But when you look at the trading activity in the secondary market for the 5 and 10 years specifically, it's actually quite impressive and it's performing pretty well. Even when you look at the spread between the two, it's actually becoming quite tight. And that's giving a very strong reflection that the Saudi credit story is becoming more and more familiar to the global investor community.
But I'm glad you raised the question of the spread between the Sukuk and the conventional, because isn't it the inverse of what it typically has been in any parallel examples you look at?
It is. It's actually.
And why?
The aspects of the Sukuk demand are more technical in the context of the GCC. So a GCC sovereign Sukuk tends to actually outperform its conventional counterpart, primarily because of the fact that for a lot of the Islamic banks, it's a zero risk weighted asset. And they don't have that many opportunities to deploy their excess liquidity. Now, if you were to go into Asia, where you have SEC registered conventionals versus Sukuks, and you look at Indonesia, for example, or in some
Malaysia.
cases, Malaysia's traditionally now issued just in sukuk, so there's less and less of on-the-run conventionals there. But if you look even at Turkey, most of the time, you'll see that versus an SEC-registered global conventional, the sukuk tends to be a little bit cheaper to it or at a premium. I think in the context of the GCC, we do tend to see, because of this, lack of a better word, captive focused demand, the sukuks over time tend to trade, they become less liquid a lot quicker because they find a home and nobody wants to let go of them. And they do tend to be less volatile, and they do tend to trade tighter.
Alexis, anything to add on the pricing and just thinking about the deal? You were on this Sukuk transaction as well last month. Standout takeaways for you from that?
Well, very short. I mean, I don't have much to add. To be honest, Chris, on the pricing, I think it was very consistent with compared to conventional pricing. Very consistent with also what we can say in other countries. I would name Turkey for one. So I think they did the right thing, and also coming back to what I was previously saying, they started by the basics, the conventional 5, 10, 30. They established a curve, which again they did not have before, and they used this curve afterwards to price consistently a sukuk around in 5 and 10 years. So I think again, coming back to the way they have proceeded, I see consistency and I see results, which is, I think, very important. Again, you minimize risk of execution here.
Tawad, so what does all this mean locally? What does it mean in terms of, I mean, typically one would talk about sovereign borrowers establishing benchmarks, establishing yield curves and so on, and this would then be a precursor to other types of borrowers, industrials, banks and so on, tapping the markets. But what do you see as a specialized to an extent, but broadly based local investor, what do you see as the impact of all of this international activity?
I think it's exciting times going forward, and we did hear from Hamad Gouwais at the CMA and the way they're addressing the issues with the regulatory framework. The fact now that we have a curve now, that we can say it's 30 years are priced this, so a corporate will price it at a different rate. It's great for issuers, it's great for investors as well. Very exciting. I think next year in Euromoney, I think we'll have a much, if you will, a much larger market to talk about in Saudi Arabia. So it's very exciting times.
Give us a number then, as you were going to say it's much larger.
I'll
The great thing
leave it
about
to the
making
bankers.
predictions...
I'll leave it to the bankers for sure.
No. The great thing about making predictions on this stage is that if you're wrong, nobody will remember. And if you're right, you can remind us.
Larger than last year, for sure. Definitely more than 5 issues.
Larger than last year. Okay, that's what they say to you when they're negotiating your salary. Okay, let's talk about some of the impediments to growth. Tawad has, in the market, I mean, Tawad has already mentioned that there are regulatory barriers to holding fixed income instruments. Wasim, what do you see as the barriers to new entrants from an issuance point of view in the kingdom, either issued domestically or internationally?
So in the context of debt capital markets, if you look at the primary order books for any issuance domestically, 100% of the investors are actually Saudi-based investors with Saudi Riyal portfolios. And the reason for that is because there isn't a local currency rating in the market here yet, so it makes it much more difficult for an international investor to tap into the market and acquire instruments in Saudi Riyal currencies. There have been multiple discussions about establishing the local currency rating, and what that essentially does, it creates a locally rated universe.
But that is underway, isn't it?
It's underway, and until that happens, I think we will continue to face some hiccups in terms of attracting foreign money to invest in Saudi Riyal instruments.
I was thinking more of issuance, from the point of view of issuance. What will happen to capital raising activity?
We've seen some companies now starting to tap into the international markets, and I think the successful bond issuance last year was a door opener for other corporates. Muna mentioned SEC. There are also other similar listed companies who are looking to tap into the US dollar.
Aqua Power is meant to be issuing. That's been delayed once, I think, but is coming.
That's one of the companies also contemplating an issuance in US dollar, among 3 or 4 other corporates that are currently underway in terms of setting up their documentation and their structure. But the most interesting segment would be the financial institutions. I think a lot of banks in 2014 and 15 tapped for Tier 1 and Tier 2 capital issuances, and now a lot of them are trying to set up US dollar programs for international markets. That slowed down a little bit end of last year due to obvious many other reasons. However, we think that some of those institutions, at least 2 or 3 of them, are planning to tap into the market right after the summer.
Mona, what do you see as the potential for financial institution issuance?
Yeah, I think one point I'd like to ask before we go into financial institution is I think what the local issuers, at least the corporate issuers, are facing is the requirement of a ratings. The local companies, when they issue in the local market, irrespective of being rated or not, actually, they get reasonable demand and reasonable pricing. The requirement for ratings is something that the companies will have to think about before approaching the international market. I think this is one of the hurdles that the local market or local corporates will need to think about before they approach the international.
That's equally a hurdle for financial institutions, is it not?
Well, the financial institutions are rated anyway, so it's not a hurdle. They have the discipline of a ratings in any case, thus the ability to reach out to the international market. But definitely, as Wasim said, we do have in the pipeline a number of banks that have the intention of issuing on the dollar platform.
Well, he said banks and corporates, I think.
Well, there are a number of corporates that are considering, but again, it depends on if they're rated, that's fine, but if they're in the process of getting a ratings to approach the international. Again, something that happened last year was the parity between the LIBOR and SIBOR rate, and we've seen a lot of, and this is not on the debt capital market, we've seen a number of local companies approach international dollars to secure dollar funding, given the LIBOR-SIBOR parity. Again, it's gone down a bit, thus possibly they might consider local, not international.
So let me ask our 2 London-based bankers over here. How many clients and potential clients are you talking to among the corporates and financial institutions of this country about issuing international bonds? You don't have to tell us who they are. We all know who they are anyway, but just give us a number. How many?
Is this a recorded line? No, I think, Chris, we're at BNP Paribas, just like many other large financial institutions, we are talking to the main players of the local economy. What I would say is that there's a difference between the potential for, let's say, corporates and banks to come to the market and their need to do so. I would not forget that financial markets is a means, not an end. Is the potential there for them to raise internationally? Definitely yes. Can they start to raise long-term in big quantum? Definitely yes. Now, do they need to do that is another story. I think every corporate, every bank has their own cash flow, their own capex, their own investment strategy, their own necessity, their own needs to borrow or not borrow, but certainly those who would need to borrow have a boulevard ahead of them, definitely, after, in particular, these sovereign bond issues.
I mean, that does change the game for them, doesn't it? Samad, you would agree?
Yeah, definitely.
I mean, these things do, sorry to interrupt you immediately, but these things do kind of have their own momentum, don't they? Somebody borrows, so somebody else borrows.
Well, it's one way of looking at it, I think, but as Alexis pointed out, completely agree, you need to have the need or the strategic requirement to have that financing. But has the sovereign established an environment where you have more efficient pricing? Yes. And we saw that where Saudi Electric has had 30-year bonds outstanding, the 2044s. The minute we went out with the Kingdom of Saudi Arabia's price guidance, we saw the repricing of the Saudi Electric long-dated bond by about 4 or 5 points. So it's pretty clear that having the sovereign curve allows more efficiency in pricing for corporates, but for the corporates to actually borrow, it's not like they didn't have access, but I think this just allows them to have access at a much, much
Alexis,
more
you had a second
efficient
comment. I'm going
pricing
to come back
point.
to you with a really difficult question in a minute.
Sure.
Alexis.
No, another illustration, if I may, Chris. I think let's take Poland, let's take Turkey as examples. Again, big countries, large economies, very prestigious emerging markets. The sovereign issues has opened the way, but do corporates and banks issue much more now that the sovereigns are active, that their sovereigns are active? Not necessarily so.
But look at Argentina. Where
Correct.
there's been, I mean, every other Pepe
Yeah.
has issued a bond since the sovereign went. I mean, we know this.
No, precisely, and I think my point here goes with your point on Argentina, is that there is no scientific exact rule. You have countries where sovereigns are very active, print a lot of money, but the corporates and banks sometimes remain extremely quiet, and then suddenly one day they issue a lot. That's the case for Poland in particular, or Turkey, would be my second example.
So, Matt, here's a difficult question for you. Is there any sense that one of the topics that people talk about on the sidelines of this conference the whole time, but hardly ever talk about on stage, is the possibility of currency reform and a depeg from the dollar? Is there any sense in which that tail risk, if you want to call it that, is in the minds of any international investors you talk to when you talk to them about Saudi credits?
Not for the foreseeable sort of investment horizon. I don't think investors feel like that is I mean, it's certainly a topic that comes up everywhere, as you'd imagine. Every meeting, every second or third meeting, somebody would ask the question. But I think the fundamental view from investors is that, or at least at this point in time, is that that's not a medium-term area of concern for them. But like you said, everybody wants to ask the question, whether it's on a panel or whether it's on the sidelines of a...
Well, they hardly ever ask it on panels. That's why I felt
Yeah.
obliged to.
I think the right people to answer that would probably be the authorities.
They've
but
gone.
I think
So they won't hear what you say.
no, but to the point of, do investors, is this one of the things that they ask? Yes. Is this a thing that deters them or is a matter of huge concern? No.
Anybody think a depeg is more than a very tiny tail risk?
Can you say that again, Chris?
Wasim, you're looking as though you might. I'm hoping to. Do you think that a depeg of the currency from the US dollar is anything more than a very, very remote? I mean, we call it a risk. Obviously, if it happened, it would be a considered piece of policy. But it would clearly be a risk to anybody that was holding assets exposed to the value of the real.
So I agree with Samad that this is a question probably better geared for the authorities. However, what we can tell you is what was relayed by the delegation on the road is that historically, especially over the last few decades, the PEG served the kingdom well. And even at a time when the economic cycle was going through a downturn, the policy of the kingdom on the PEG with the US dollar remained. And the message from the authorities is that for the foreseeable future, it will continue to be the same. And we believe that that also drove a higher level of comfort from the global investor community. Whether we have a view or not, the DPEG would serve the country well or not, I believe this requires many analysis and studies, because it's linked really to
I
the root
imagine
of
it
the
would get
economy.
those analyses and studies. I don't think somebody would wake up one morning and suddenly decide with the stroke of a pen. So I don't think that's a risk. It will only be done if it's done in a considered and reasoned way. Okay, we've got a few minutes left of our allotted time. Is there anybody in the audience that would like to throw a question at one of these people? If you could make it a really, really difficult question, that would be very welcome. Anybody have a question from the audience? Come on, don't be so reticent. Are there any? Is there anybody in here that thinks that the currency is going to be worth half as much in a year's time because the peg has gone? No, there's nobody who thinks that. There was a gentleman over there who looked as though he might be going to ask a question. Go on, dive in.
Yeah, my question is just, Christopher, the same as posed by you. I didn't see why the panel can't answer. and give their view on your previous question just a minute ago, whether it is a risk. Yes, the authorities are in a good position, whether there's research or not, on what constitutes policy and how that effective that policy will be. But what's your view, you guys and lady sitting on the panel? Let's have it. That's the whole point of a conference, isn't it? And a presentation.
Okay, Tawat, you're the only one that didn't get to answer on that, so you give your view.
I can say strongly it's a big no. They will not depeg. There will be no depegging, if you will. And I can say it, I can put my reputation on the line. We'll be back next year with the same exchange rate.
Sorry, the question wasn't whether
On the FX.
they'll do it or not. It's, would you consider it a risk, depegging? It's just your view.
I would not.
As an economist or banker or financier, everybody's entitled to a view.
Absolutely. For the next 12 months, I personally do not consider it a risk.
Okay.
I'm going to answer it from a slightly different perspective. So if you look at other countries that depegged or revalued their peg price against any other established currency, you find that economy is very strong when it comes to the industrial sector and being an exporter by nature. However, Saudi Arabia, as we all know, it's not a secret, it's planning to transform into an exporting country. So until NTP particularly kicks in by 2020, and we nationalize a lot of industries in the kingdom and create some momentum to start exporting, I just don't see how depegging would serve the country well.
Anything to add over here? Come on, you're warming up now, guys.
My answer is, again, short. I do not see any depegging.
All right, okay.
That's my personal opinion. Very happy to take it offline.
Okay, no, that's fine. I asked a German federal finance ministry official last week if he thought there was, if he thought that the EU would have a free trade agreement with China before the UK. His answer was yine. Okay. Going to have a quick whiz round now. They're all very reticent about predictions, especially when they're about the future. But nonetheless, I want them each to give the audience, to give you, just a little bit of a snapshot of what they think we'll be discussing a year from now at this conference, inshallah, if we are all saved. Mona, why don't you start us off? Ladies first.
Very good. Thank you for that. I think in a year, I think the regulations will have changed. I think it will support debt capital markets. We'll have a more vibrant debt capital market. We'll have more issuers. I think even the investors will be a bit more varied. We'll have a variation of the investors. Hopefully, oil prices will go back to $75, but don't count that part of my prediction. But I think a good year is ahead of us.
Tawat.
I'm very optimistic. I think Vision 2030 and the NTP program, it's unlocking tremendous value in the kingdom. And to the question asked about the currency, just look at the balance sheet of this great country. If you are the owner of this balance sheet, 2.5 million square kilometers, it's really tremendous potential. We have the great leadership right now. We have the drive right now to drive it forward. So I think next year will come with really exciting times.
And you think things might go a little bit quicker than some people are imagining?
Definitely. We've been here 12 years, and just imagine how decision-making has changed in 12 years. 12 years ago versus now, right? So it's really exciting times. We have to give, the Prince Mohammed bin Salman and his vision and driving the whole country forward. It's unlocking tremendous value. It's painful. It's unlocking tremendous value. It's still not priced in. So definitely the currency is great.
I have to say I agree with that. I think it will change. The pace of the accelerated pace of change is accelerating quicker than anybody imagines it truly is. Wasim, do you share what Mona calls optimism that oil will be at 75% of the fiscal break-even price? Doesn't sound very optimistic to me, but anyway.
Yeah.
No. Go on, Wasim.
Yeah. So the previous panel, one of the gentlemen mentioned that if we're still betting on oil prices in a few years, then we're heading in the wrong direction. I tend to agree with that view. In my humble opinion, we have a lot of challenges. I mean, it's very important for us to acknowledge that the challenges are there. However, I believe it's very important to capture the positive momentum that's been created over the last 4 months. We do need a lot of chips to fall in place, and we need to carry that momentum forward. And I think it's very detrimental to the success of NTP and the diversification of the economies to capture that momentum and bridge the gap between the authorities and the private sector. I think this would be a very important and a critical factor in ensuring that we execute the diversification plans. So optimistic, yet acknowledging the many challenges that we have.
Thank you, Wazir. Chips, that wasn't a casino analogy, was it?
No.
Cinemas first. One step at a time. Samad, you look a year ahead from now, and what do you see?
Well, I think you won't have boring bankers on a panel. You'll actually have investors, because the level of engagement with investors is only going to increase, and then you can ask all these tough questions directly to them.
We love bankers, honestly. We do.
True. But you'll ask all these tough questions about whether it's a tail risk or not, and what is a tail risk, directly to investors. I just expect this is jump-started. It started really quickly. It's a very steep curve in terms of the volumes and engagement. By this time next year, hopefully you'll have international investors here talking about their views on both equity.
The trouble
and
is,
debt.
you've got to go out and sell this stuff to international investors.
Oh, we've done most of the selling. I think it's, you just need to convince them to be on the panel next year.
Okay. Is that what you say to them? Is that when you're pitching them, you say,
You can
I
get
don't
an
know.
opportunity.
I don't know, you should tell me.
No,
Alexis,
but I think your view is we're going to be direct.
we want you here again, definitely. Alexis.
Call me biased, Chris, but I think Samad is actually one of the best people to sell that story.
Okay, so Chris, to answer your question, I thought you were going to ask me about French elections, but on what we can expect next year. Look, last year I remember being in this room. The question was more or less, can the kingdom access the international markets? Period. We know what happened. We discussed that at length throughout this panel. Today the question is, how did they price? What was spectacular? What did you notice as a success through their transaction? So what could the question be next year? The question next year could be, how have they further diversified into new pockets of liquidity? What new structures, what new maturities, what new currencies perhaps they've gone into or they intend to do so? So it's going to be a question about how further down the line have they progressed. And I will also add, maybe we'll talk about pricing, because if I look at a major theme which has been the Saudi CDS. Saudi CDS last year, pretty much everybody in the room was saying it's mispriced, it's too high. I remember the days when the CDS was above 200. Today it's around 89, 90. It's a remarkable tightening. Maybe, just my personal thought, maybe next year we'll talk about how low it is, and maybe if it's not mispriced, the other way around. So these are my 2 cents, Chris. You asked the question, here's my answer.
And the French elections you'll tell us about later.
On Sunday night.
On Sunday night.
Correct.
Okay,
French time.
But basically, everybody is fantastically optimistic about this market. Samad, you're optimistic?
Very much so.
Optimistic?
Absolutely.
Everybody volunteers to be optimistic. Good. Now that is a very good note on which to send you on your way for the day, but to remind you that tomorrow we have a little bit more. As we have ministers, we have excellencies, we have interviews, we have panels, plenty more to come back for. We've spread it out a bit more this year. But before you go, please join me in thanking these excellent panelists. Thank you very much.